Welcome back to Counting the Cost. This week, US President Barack Obama outlined the biggest overhaul of the financial regulation system since the Great Depression. But even as he spoke, vested interests were preparing to water down his proposals. Wall Street companies, who contributed almost $40 million to Obama's presidential campaign, urged caution, warning that hastily conceived measures could further hinder economic growth. Samal Shahat in London has more.
Indeed, wary of increased interference in their businesses, a succession of financial institutions in the US this week repaid money they received from the government rescue program. JP Morgan returned $25 billion with interest, money that the bank's chief executive claimed it had never needed in the first place. And fellow big players Morgan Stanley and Goldman Sachs have each repaid $10 billion in federal aid. So how does this affect the prospects of economic recovery in the US and across the world?
This week may signal the long road back to financial health for America's banks. Some of the so-called zombie banks, banks which are dead due to a lot of toxic assets, but still walking among the living, are being allowed to pay back their bailout money, an indication to some that they're back to life. But whatever happened to the Obama administration's central plan to make banks healthy by making them remove their toxic assets, that is, debts and loans that have gone bad on things such as mortgages, off their balance sheets? It was a $1 trillion venture, and it was called the Public-Private Investment Partnership, or PPIP for short.
The PPIP initiative was launched by Tim Geithner as a way of stripping banks of their toxic assets. And the US Treasury provided extraordinary inducements to the finance sector to help them download some of these assets from the banks. But those inducements, although they're extraordinarily generous, haven't been sufficient to attract buyers into this particular market. And so the initiative has failed.
Indications are that before this emergency is over, we will need many, many more such rescue stations.
Yet, when the PPIP plan was launched on March 23rd, Wall Street then welcomed it with open arms, even rallying in celebration. The PPIP dominated every headline, every news story for a solid week. It was big, it was complicated, and it gave the bankers a lot of taxpayers' money.
Yet, despite this, Wall Street, the major benefactor of this partnership, killed off and buried the PPIP.
The bankers didn't want to engage in the plan, so its death was a quiet affair. No media coverage, no market rally, no ceremony. But why did things have to end this way?
Your entire staff, I know, has been working very hard to find some solution to these things that are happening. Do you have any answers at this time?
The PPIP, from a financial point of view, would have been a good deal for the banks. But the banks decided that they'd rather not give the government another opening to get its fingers into their pie. And they're even more afraid of Congress than they are of the executive. They don't want government interference with remuneration, bonuses, dividends, share issues, and any other corporate decisions. And they fear that participation in this government-sponsored and government-subsidized arrangement would be the camel's nose in the tent.
This would have forced the banks to come clean about the extent of toxic assets on their balance sheets. And that is something that they are reluctant to do, because I think they believe that the economy will recover and that they'll be able to deal with their toxic assets. I think that's somewhat delusional, but that is, I think, their approach.
And the question becomes now whether gambling on the bank's resurrection will come back to haunt us.
Most of the banks that chose to repay the government should not have been allowed to do so. And just as the banks should not have been asked whether they wanted to participate in the PPIP, they should have been told to participate in the PPIP. That would have been the way to get the assets off the books. There were other ways as well, but there has to be some mandatory way of cleaning the balance sheets and getting these banks function on doing what banks are supposed to be doing, lending to the real economy, instead of having a life after death experience at the expense of the wider community.
Right.
everything is being done that can be done.
The trouble with policymakers gambling with these banks and gambling with the possibility that they will, if you like, arise from the dead, is that it means that policymakers are not taking the right actions needed to help moderate, if not avert, the crisis.
In zombie horror films, what generally happens is that if you don't kill off the first wave of the undead, they begin to infect the general population. And in our reality, this means that even if the banks are paying back their bailout money, they're still not healthy because of their toxic assets. And this will delay our economic recovery.
Well, with me to discuss this further is Willem Bouter, a professor of European political economy at the London School of Economics and Political Science. Professor Bouter, welcome to the programme. You said in the package that we've just seen that it was wrong to allow some of these zombie banks to pay back their bailout money. Now, why did you say that?
Well, the money that the government had given or lent to these banks was part of their capital. It allows them to survive even if losses are made on their investments and their loans. So if you reduce the bank's capital by allowing them to repay the government, you end up with banks who act more conservatively, lend less to you and me and to the business sector. Unless they had too much capital to begin with, which I think was not the case for any of these banks.
No, I mean, some of these banks are really hoping that there will be an economic recovery and that in many ways will plug the hole on their balance sheets. Do they know something that we don't?
No, I don't think so. Hope springs eternal, but I think they definitely know that there is a fair chance that they will not be able to, to survive this in any commercial way. But they're gambling for resurrection because the rewards are very great for the banks and for the bankers if they succeed, while the losses will again be shared by everybody but these same bankers. So the old incentives that cause the distortions are still in place.
When you say the rewards will be great for them, how will that be? Is it because they're taking so much taxpayers' money?
No, if for some reason these toxic assets were to come good again, right, then they'll smell like roses. That isn't likely, but there's a small probability of it happening. And that's what they're gambling on.
Do you think, I mean, in many ways from what you're saying that they're gambling away with our economic recovery and our futures again?
Well, there's not a deliberate decision, but the consequence of their self-centered and self-interested behavior is that the recovery will be delayed and slower than it would otherwise have been, yes.
Tell me, why then has the Obama administration allowed them to pay back their money?
The honest answer is beats me, because it really doesn't make sense. They simply should have said, no, you cannot repay it unless we are really convinced that it is surplus to the requirements of a bank that lends and invest in a normal manner. And that can be said only of very few of these banks. Most of them are capital scarce.
Right now, President Obama is introducing the most sweeping banking regulation in recent American history. Do you think he could use that new power or those new regulations to actually force banks to come clean about the toxic assets on their balance sheets?
Well, I think he already has the power, or the Fed and the other regulators between them have already got the power to do that. They simply have chosen not to exercise it. There's no reason why the Federal Reserve Board, the SEC, and the other agencies, the Treasury, cannot demand clarity and action. But they have chosen to approach the banks with kid gloves.
And do you think this has something to do with the power of the banks and the closeness to Washington, as some people are saying? I mean, Joseph Stiglitz has gone on record to say that, yes, there is a worry about the closeness between the Obama administration and Wall Street.
There is no doubt that the last 20 years, the influence of Wall Street over Congress and indeed over administration has grown out of all proportion to the underlying significance of the sector. Yes, there has been capture, in a way, of the political processes in Washington by Wall Street. And the administration is trying to to get away from that. But of course, many of its members were part of the of the cheerleaders and the movers and shakers that brought this increase in financial sector influence. So they're really shooting at their own past ghosts.
Professor Willem Buiter, thank you so much for joining me.
My pleasure.
This year's air show, held in Paris, revealed the latest aircraft models to hit the runways. But amid tense times for the industry, manufacturers are struggling to match sales made in previous years. In 2008, at the Farnborough Air Show in the UK, orders for aviation giants Airbus and Boeing alone amounted to a staggering $64 billion. But this year in Paris, orders and commitments for all manufacturers totaled a mere $9.5 billion. In 2007, Airbus sold a record 1,458 planes. But in the first 6 months of this year, it's only managed to win orders for 32 jets. Boeing tells a similar story. In 2007, they reported sales of 1,423 aircraft. But so far this year, only 72 orders have been placed. In addition to facing the worst crisis in their history, these two giants of the sky are facing new competition from the east. Nazanin Moshiri has more.
Sky-high ambitions. The Russian Superjet 100. Its first passenger plane since the days of the Soviet Union. It's a brave move. These are tough times for the industry, and buyers are hard to find. However, Sukhoi, which makes the plane, says they're selling fast.
This is a breakthrough product that will make Russia able to compete in the international aviation market. We should be proud that Russia made this plane.
But it's Gulf carriers like Qatar Airways that are spending huge amounts. The airlines announced firm orders for 24 new jets in a deal worth billions of dollars. But it's nothing like the hundreds of orders made at previous shows. Even the usually resilient defence sector's scaling down as governments make budget cuts. Thousands of exhibitors here at Le Bourget are facing their worst crisis since 2001. It could cost the airline industry a massive $9 billion this year.
The biggest challenge is realigning their cost structure. Obviously, trying to decide what to do with the aircraft they've already got, trying to decide how to use them efficiently. In some cases, that means actually parking aircraft and not using them at all. It means trying to predict where the remaining demand is going to be and making adjustments such as accepting the fact they're going to have less business and first-class travel as passengers basically decide that if they're going to travel, they'll spend less money doing it.
But one of the biggest players, Turkish Airlines, says it's bucking the trend. Its boss is predicting strong growth in profits and passengers.
Still, we are growing this year. And international route, you don't believe on it, from January 1st until now, we grow 17% in international routes, We increase capacity in about 20% in international routes. So this means this crisis is helping us because we learn from the past how we can compete in the harsh environment or compete with others more than they can do that. So this means for us there is no crisis, and this is the few airlines, Turkish Airlines, a few that growing this year.
Airlines make most of their money from people at the front of their planes. And even Turkish Airlines will be suffering from the lack of business customers.
All of this will have an impact on passengers. Airlines don't want to fly half empty, so routes will have to be cut and frequency of flights too. That'll mean less choice for us and potentially higher fares.
The Air France disaster's also cast a shadow. French air accident investigators are based at Le Bourget. There are real questions here about the safety of what are supposed to be state-of-the-art airliners.
People go to airports on an assurance that they trust the air operators and the regulators, that they have a safe operation. And that is very much a question of saying, look, when something happens, it's not left unresolved. We find an answer, we report back to our travelling public, and we say, we fixed that problem.
It's 100 years since the first Paris Air Show, but there's not much to celebrate. There have been many technological advancements since these vintage planes were in service, but there's a real sense that for now at least, the glory days of the air industry are over. Nazanin Moshiri, Al Jazeera, Le Bourget, Paris.
And you can always keep up to date with these and other stories on our website, aljazeera.net/English, and click on the left-hand side for the business page. That's it from me, Lauren Taylor, this week on Counting the Cost. Thanks for watching.